Let's bring in Craig Bolanos, the CEO and founder of Wealth Management Group, for some common sense. Good to have you here, Craig. You have talked about investing outside of the U.S. in some of our previous shows. This can be daunting. What are some key points that investors need to keep in mind? And are investors missing out right now?
Well, I don't think anybody's been missing out, because for as long as anyone can remember, investing abroad has actually put you into what I call the diversification penalty box. Meaning, if you're an American, having your 401k primarily invested in US-based companies has been the place to be. From a performance standpoint, you haven't wanted to be in EM, emerging markets. You haven't wanted to be in EFI, Europe and Far East. But at some point in time, the winds are going to begin to change. And Angela, I think for far too many investors, their portfolios are US only, agnostic to the rest of the world. And if history's our guide and it's the only guide we have, people better start getting their geography right, lest they run the risk of getting left behind.
Are there any countries to start researching in order to be diversified?
Well, let's start with the macro. Again, I want to encourage people to not just be S&P 500. If they want to get retired and stay retired, there's a bigger subset of opportunities that are out there and a subset of additional growth rates. And I think the first asset class that I speak about is going to be EM, emerging markets right now. The truth is, if the US economy continues to have this soft landing accompanied by these reductions in interest rates, those reductions in interest rates are essentially going to create pressure or a decline on the US dollar. That is a tailwind for investors who are putting monies into the EM space, emerging markets. So I think that's your first place to go. After the emerging markets start to get filled, then and only then do I think people continue to put some dollars into their European holdings. The valuations are attractive, but the growth rates aren't as enticing there.
What else do you suggest?
Well, Angela, when it comes to investing on another side of the pond, like we tell everybody, part of being a good investor is being an excellent student, because a student always does their homework. So I think the first thing is make sure you have a financial plan. Make sure that financial plan reverse engineers into asset classes and proper ingredient weights. And maybe you should be 3%. Maybe you should be 9, maybe you should be 15, maybe you should be 30% abroad in your international portfolio exposure. Once you get those numbers figured out with deep meaning and intention, then work to gradually build those positions over time. And there's no one place to get that information. There's a myriad of places. So what ultimately matters is that you have a process that's TNT, tested in the trenches, and we can certainly help with that at the Wealth Management Group.
Go to businessfirstam.com for where to see our show on TV.